You have to think in the year 2045, I think a Bitcoin's worth $13 million. So every Bitcoin that you don't buy is a $13 million cost. That Ferrari that you're going to buy is going to cost you like 6 Bitcoin. And so it's going to be a $100 million Ferrari.
Bitcoin Zela stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zela today and enjoy the new edge. Michael Saylor dives into his 100x return strategy, debates Bitcoin, this macro panic, and reveals the corporate treasury revolution. Stick around to unlock these insights and supercharge your crypto journey.
I think the best way to get superior returns, 100x type returns, if you're an individual, would be you adopt, you keep your day job, and so you maximize the cash flow you generate via whatever your profession is. You're responsible on your expenditures. You have to think in the year 2045, I think a Bitcoin's worth $13 million. So every Bitcoin that you don't buy is a $13 million cost. That Ferrari that you're going to buy is going to cost you like 6 Bitcoin. And so it's going to be a $100 million Ferrari, right? If you look out 20 years. So you have to keep your job, unless you're insanely rich, don't splurge on the Ferrari. Buy the 6 Bitcoin instead. And with regard to leverage, the intelligent leverage for the individual is generally long-dated, mid-dated mortgage debt. So if I have any kind of property, if I have a house, I would put a long mortgage on it, a 10-year mortgage or 15 to 20-year mortgage on it, especially a conforming loan, and then I would roll it into Bitcoin. Because mortgage debt is not mark to market. It's against an asset which is fairly stable. Normally, the interest rates are somewhat subsidized by a Fannie Mae or a Freddie Mac program or a government program. So it's the cheapest form of permanent capital that someone can get. So, I give you what you shouldn't do. You shouldn't quit your job. You shouldn't splurge on sports cars you can't afford. Don't buy a yacht because it's obscenely expensive, and don't pay off your mortgage. Don't get debt free. Any capital you have that's not mark to market capital would be better invested in an asset that's going up 30% a year for the next 20 years.
Bitcoin's thunderous push above $100,000 on May 9 lit a fuse under the market, as traders scrambled to cover over $800 million in short positions, the largest cascade since 2021. Watching the price climb to $104,150 in late New York trading, you can almost hear the collective gasp of greed echoing through the crypto fear and greed index as it leaped from 65 to 73. That manic energy tells us one thing: investors are hungry for more. Behind the scenes, hefty sell walls totaling $2.85 billion hover near the all-time high of $109,500, yet Bitcoin's momentum seems undeterred. The weekly chart reveals a classic bull flag pattern, and if history holds, the breakout from its $88,000 trendline could propel BTC toward a $182,200 target, about a 75% surge from here. Even with the RSI flirting with overbought territory, the MACD's upward cross and Bitcoin's dominance above its 5, 10, and 20-day moving averages signal that bulls still hold the reins. Forecasts now range wildly. Some technicians forecast a short-term sprint to $106,000 before a breather, while others envision a year-end peak around $170,000 or higher. At the extremes, industry titans like Changpeng Zhou peg this cycle's ceiling between $500,000 and $1 million, fueled by institutional cash flows and a pro-crypto political landscape. Wherever you land, one thing's clear: Bitcoin's rocket is primed for liftoff.
All of these actions are creating uncertainty in the market, right? Trade uncertainty, operational uncertainty. How do I organize my supply chain? What products should I stock on my shelves? What products should I buy? How long will it take? What services do I need? Where do I source the services? That uncertainty creates massive inefficiency. It creates dislocation. Investors are discounting the future cash flows for the next 10 years of a given business. And so if it's uncertain whether the business will exist and in what form and how profitable it'll be, then they tend to shoot first, ask questions later, or in this case, sell first, ask questions later. Their view would be, let's just back away from the market until it becomes less uncertain. That's what is driving the macroeconomic headwind right now. Whenever a company runs into a difficult time like that, whether it's COVID, or whether it's the current, tariff wars, it behooves the company to be extremely well capitalized. What you would like is to have a company that has a deep, deep pool of liquid assets you can rely upon, even if your core business revenues get zeroed out. If you don't have that, you're going to go bankrupt and in prolonged crisis. Herein lies the solution, the promise of Bitcoin, and the problem with traditional corporate finance. Traditional corporate finance teaches these companies to decapitalize. So they've all been decapitalizing. They've been surrendering their capital via buybacks and dividends. So when they're not well capitalized, and they run into economic uncertainty in their operating business, that creates extreme anxiety for the employees, the executives, the customers, and the investors. The promise of Bitcoin and the Bitcoin standard is that every company can be well capitalized. Because if you simply start sweeping your cash flows into Bitcoin, or you convert your dividend into a Bitcoin buy, or if you convert your buyback of stock into a buyback of Bitcoin, then your enterprise value over time would double. And your organization would be valued partially on future expectations, but partially on the assets you own. And so you can imagine when 95% of the value is future expectations. When they become uncertain, 95% of the value becomes uncertain. But when half the value of a company is based upon the assets they own, right, then they have a built-in insurance policy or a shock absorber, and they have the luxury of being able to sit back and see how things work out, but without being desperate or taking short-term actions. Bitcoin offers one more collateral advantage, which is the more uncertain the operating world gets, the more valuable Bitcoin becomes and the more compelling the idea is, because there are no tariffs on Bitcoin. Bitcoin doesn't have supply chains. It doesn't have all of the regulatory risks, the tax risk, the operating and execution risk that you have when you have a business based upon providing products and services in a particular way.
Bitcoin's march toward new all-time highs hit a decisive test around $104,000, and suddenly bulls find themselves at a crossroads. After rocketing 10% in days, that headline-driven surge has paused for a breather, retracing towards support just above six figures. The $100,000 mark looms large, not just as a psychological anchor, but as a liquidity magnet where buy orders cluster, and a slip below it could trigger fresh volatility. Despite the excitement, seasoned traders warn that true strength requires passive flows of steady volume to cement these lofty levels. The recent US-UK trade optimism served as a spark, but without sustained follow-through from broader markets or new catalysts, Bitcoin's path could wobble. Every price jump seems tethered to geopolitical tweets, and the question remains, will fresh headlines keep fueling the rally, or leave gaps begging to be filled? Zooming out, Fibonacci retracements, drawn from this year's $75,000 lows, highlight a critical zone just cleared at the 1,618 level. That breakout signals the final technical hurdle before untested territory. Yet it also leaves few friction points above. On the flip side, the bulk of bids sit beneath $100,000, an imbalance that makes sub-six-figure dips a potential hotspot for sharp rebounds. Watching how order book liquidity reacts around these levels will reveal whether Bitcoin can hold its ground, or if the next major skirmish is just beginning. And do not forget to subscribe to Bitcoin Zela. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.